How's it going, everybody? Welcome back to the channel. My name is Jay, and today we're talking about QYLD. As I'm sure most of you are aware, QYLD is the Global X NASDAQ 100 covered call ETF. It's easily one of the biggest dividend income ETFs on the market with over $3 billion in assets. But a look at the chart of QYLD has started to raise a big question for a lot of people. Is the strategy of QYLD failing? And is QYLD slowly making its way to zero? So in this video, we're going to take a close look at what the heck is going on with QYLD to see if we can come up with some answers to those questions. So if you enjoy or find this video useful, be sure to hit the like button down below. And while you're down there, subscribe to the channel for more videos just like this one. So now with that YouTube-y stuff out of the way, let's get started. And to determine if the QYLD strategy is failing, and to understand where the ETF is headed, we're first going to need a quick refresher on exactly how QYLD actually works. The QYLD ETF holds all of the stocks included in the NASDAQ 100 index and writes covered calls against the index in order to generate income. The covered calls that QYLD is writing are what is known as at-the-money covered calls, which I go into more detail on in my review video of the QYLD ETF, which you can find up here. But for our purposes right now, all you have to know is these at-the-money covered calls are the calls that are going to generate the most possible income for the ETF when they sell them, but they strip away almost any potential for price appreciation at the same time. A portion of those hefty premiums that QYLD earns from selling those covered calls are what's returned to investors in the form of that 12% dividend yield that QYLD is now famous for. Then a smaller portion is reinvested back into the NAV of the fund. Now if we go back to the chart of QYLD, it almost doesn't matter what time frame we look at for the chart. All you're going to notice is that the trend of the ETF's price seems to be heading lower and lower over time. And even if you're investing in QYLD just for the monthly income from that dividend payment, which, if we're being honest, is what most people should be here for in the first place, and you're not worried about any price appreciation from QYLD, it's still very jarring to see the price of the ETF heading lower and lower and lower. Currently, the price of QYLD is around $17 per share, which is lower than the big pandemic-induced drop we saw in early 2020. And really, there's no point in earning a big dividend if you end up losing money overall. So what's going on with QYLD, and is this strategy we talked about doomed to fail? As we mentioned, QYLD is investing in and writing calls against the NASDAQ 100 index. The NASDAQ 100 index is most commonly represented by the ETF with the ticker symbol QQQ. And if we compare QYLD versus QQQ over the past year or so, things don't look too bad. The QQQ is down 20% as tech stocks have been getting hammered over the past year or so. And QYLD is following right along, albeit down slightly more, around 25%. So it seems that the general decline in price over the past year or so can be attributed to the fact that it's just been a bad year for stocks all around. And tech stocks in particular, which is what the NASDAQ 100 index is mostly tracking, and therefore what has been mostly influencing QYLD, have been taking a beating. But this comparison of QQQ and QYLD doesn't include dividends. After all, most of the reason we're investing in QYLD is for that 12% yield. So now if we look at a comparison of QQQ versus QYLD, over the last 12 months with dividends reinvested, we see a very different picture. Now, QYLD is actually outperforming QQQ by roughly 5%. Now, we've got to note that when QQQ eventually rebounds and stocks start to take off again, they're going to leave QYLD in the dust, so don't expect something like this to continue. But it's nice to see that things don't look so bad for QYLD once we factor in that dividend income. But QYLD has been around for more than just the past year or so, and it looks like the share price has been declining since inception. Is QYLD headed to zero? And the answer to that simply is no. QYLD isn't going to head to zero unless QQQ heads towards zero. And if that happens, we have a lot more things to worry about. But the more detailed reason why QYLD isn't headed towards zero is because when QYLD is selling those covered calls against the NASDAQ 100 index, it's generating a higher percent of its NAV, or net asset value, as income than it's losing by way of dividend payouts, fees, and repurchases of shares that get called away. And you can see this in action right on the Global X website. They have data going back as far as June 2019, and they show you every single month since then. You can see how much option premium QYLD has earned from selling those covered calls, and then how much of that option premium they're actually paying out to investors in the form of the QYLD dividend. For instance, in August of 2019, QYLD earned 2.37% in option premium and only paid out 1% as the distribution to shareholders. That means that extra 1.37% they earned was reinvested back into the NAV of the fund. Likewise, in February of 2022, they earned 3.03% and paid out 1.01%. March, they earned 2.83% and paid out 1%. And that 1% of the options premium payout as the dividend distribution is the key number, because that's the max that QYLD is ever going to pay out. So the higher the options premium that QYLD is earning, the more likely that they pay out that full 1% as the dividend distribution. But in the months where the options premium is lighter, like for instance in August 2021, QYLD only earned 1.64% from selling those options. But what they do is they still leave themselves a buffer, and in that month, they only paid out 0.82% as the dividend instead of the full 1%. So baked into the strategy of QYLD is this buffer they're leaving themselves every month, so you don't have to worry about the ETF going bust. But that doesn't mean QYLD is the perfect ETF. It does have its faults. And to balance out some of those faults of QYLD, you should hold it as only one piece of your overall dividend income portfolio. And if you need ideas on what else you might want to hold along with QYLD in a portfolio like that, this video right here details 4 ETFs that, when held together, create one of the best income ETF portfolios you can build. So be sure to check out that video next. Thank you for watching this one, and I'll see you next time.